production and the people. On one side, the financial excluded people, and other side of the increasing population. This slide I have only stated how the increased demand for funds, the financial demand, particularly for the long-term funds, has been on high demand because most of the banks and financial institutions concentrate on the short-term or the crop loans, and while you find that's a kind of huge demand for the agriculture, rural finance or agricultural finance. So all stakeholders in the given situation have realized the importance of having some kind of new means of financing the rural sector, rural finance, and they are in different ways. The donor agencies, the financial agencies, semi-formal, formal, informal agencies, and all have been trying to adopt different means to increase the access to finance, increase the flow of credibility or financial services to the agriculture. Some of the institutions, international institutions like the MasterCard Foundation, there are several examples who have created the special fund for encouraging the innovations and also scaling of the innovations and give awards. So there are many examples of how people have realized the importance of this. There are many, in my paper I have cited many examples of successes in Asia, in Europe and also in the African countries. I will not narrate those things because my purpose is to flag some policy issues and some kind of regulatory issues for discussions. So there are many kind of successes and innovations in institutions. And most of these innovations are again on the technology. The technology using digital finance, mobile banking, whatever kind of agricultural finance products have been there, they center around in the technology. And more technology innovation solutions are being in the market. So there has been a kind of from this kind of scenario, I just flagged certain issues based on the study conducted for Africa and KMP in the southeastern African countries on the policy development and the role of the contribution of the fund of the donor agency. The first is the perception level. Everywhere the perception is the rural finance to be seen as a kind of, not to be seen as a business proposition. It should be seen as a business proposition and not as a policy imposition by the regulating authorities or any government. The second is another weakness is in the rural finance institutions, again handicapped by the kind of the attitude approach of the officials in the rural, working in the rural areas, and how to improve the skill and willingness and responsiveness of the staff engaged in the rural finance. That's a kind of challenge to be seen. The third is the rural savings has not been, the products and the savings front has been very limited, how that could be given a greater space in the rural area. The another issue which has been seen in the African countries, some of the countries, while legislation is there is no policy. If policy is there is no strategy. So my view has been, and the study has been recommended, it should be first to start with the policy, followed by strategy, followed by legislation, then regulatory and supervisory arrangement or institutional arrangement. A kind of systematic approach has to be put in place to make the rural finance more effective. Then many of the international agencies and donor agencies are implementing the rural finance program and also the implementing livelihood program, where they have been a catalyst in terms of making an innovation or any kind of piloting an experiment. But the issue has come whether a policy they could play, because we could see from the study, they could play a very positive role in influencing the policy of the respective countries in rural finance. So they could play a better role and greater in terms of if they are having a kind of component for policy development. The question comes, what should be the right way? It's not every government has its own perception, own approach, own policy, but making a general view that in this rural finance and agriculture sector, the government, with the kind of changes taking place, government could be the leader, could be kind of set objectives and goals, and can make the agriculture sector as a growth oriented, making a empowerment of the people. That kind of role they should play, rather than playing a role of just giving a service provider. It is better to play that kind of role. Second question is, so many banks studied, so many Ministry of Finance we have studied. We found some of the institutions have got Ministry of Finance, but no kind of unity within the Ministry of Finance to give focus attention to the rural finance sector. So the recommendation has been whether there could be a separate kind of microfinance or rural finance unit in each of the state government institutional mechanism. And some of the countries have already opened that kind of institution with wherever the further rural finance programs have been. For example, in Zambia, many countries have done it like that. Then the central bank and the government relations is very delicate. There have been close consultations and all that. But the issue is whether this in the business decisions, whether the central bank would have the autonomy in terms of formulating and implementing it. Though consultation mechanisms should be there. Then there are countries where rural finance development forum for discussion of the rural finance and microfinance issues are also have been there. So for instance, in Uganda, they have got a microfinance consultation forum. So that is those kind of forums actually flags the microfinance and rural finance issues. Then many of the countries, they do not have the comprehensive legislation of the customer protection, and whether every country they have got some kind of regulation, but the comprehensive legislation and the kind of regulation to make the farmers and the financial customers and protect their interests. Then there have been new laws in the financial sector, maybe leasing, maybe mobile banking, maybe warehousing. But what we have found, the original acts vis-a-vis the new acts legislated, there have been divergence. Can there be kind of, so in Zambia they have started a review of all the laws to make it harmonized. Can there be a harmony of laws of the old and new so that that kind of divergence do not be there? Then the policy have been evidence-based policy. We have got in Ethiopia Agricultural Transformation Agency (ATA). They do a lot of kind of studies in terms of policy exploration and also giving to the government advice how to go about it. So this is in a way what resume. Coming to the regulatory authority, the question is what should be the design of a regulatory authority in the rural finance. There are debates. Earlier, the IMF had conducted a study covering more than 100 central banks. They found three models are there. One is central bank taking the role of the total regulation. The second is another institution created to take care of the regulation. Third is some kind of delegated regulation or supervisory power is given to another institution. The instance I can take Kenya, where you will find all these sectors, they have got a regulatory authority, including SACCO's society's regulatory authority is in place. Yet the instance of Ethiopia, it is a different, where you will find it in the microfinance institutions, all are regulated by central bank. Take the instance of India, where there are several regulatory authorities, but they have a kind of institutions like NABARD, where it takes the care of the supervision of the cooperative and regional banks without diluting the power of the central bank. So the analysis has been, no one is perfect, every model has its own imperfection and perfection. It has to be decided based on the country's specific environment and requirements. So that is one kind of things has to be seen. Then the regulatory, all the central banks are studied here, they did not give any kind of concession in terms of regulatory norms for the rural banks. They are saying that market forces should decide what should be regulatory norms. We should not make any kind of anything. Even the physical arrangement of the branch licensing or the security arrangement are the same as the urban branches and the rural branches. The opinion is divided, but the issue is perhaps in the initial phases, the regulatory rigors can be less as compared to when the sector progresses or sector should develop. There could be central bank to see that the differentiation could be eliminated. Then it's like Ethiopia, they have got a very participatory kind of regulation making. A series of discussion takes place when they issue any kind of regulation. So that kind of regulatory forum, regulatory exercise by a participatory mechanism is a very good feature. There is so many kind of financial products are coming. For each kind of financial product, may be digital finance or mobile banking, there is a need for comprehensive regulation or supervisory norms, and which central bank has to do. Then the another debate is whether commercial banks should be mandated to finance. As in India, it was told that it is mandated to finance for the agricultural sector by a central bank directive or the priority sector guidelines. So another view is why one should mandate this if there will be congenial atmosphere kind of environment or the rural sector is being taken care of with all kinds of support and enabling an environment, there is no need for mandating commercial bank. If they find it used, they can finance. The another issue is the supervisory. There is a saying, you do not regulate if you don't have capacity to supervise. So the regulatory institutions must see that they have enough capacity, enough kind of human resources to supervise the institutions. The another issue is whether you will find in most of the countries there is a kind of apex bank. Just I have given the instance of NABARD. You will find in Tanzania there is a agricultural development bank. We have got a national savings and credit bank in Zambia. We have got each of the countries, though they are coming up with even PKSF in Bangladesh. So this question is the resource constraint of the microfinance and agriculture sector. There must be some institution providing the kind of supplementary support. So the question of sometimes the viability of the development financial institution comes into the picture. But the issue is there is a need, a dire need for providing the resource support to the sector as well as also providing developmental support. And each of the countries are in the process of having a kind of setup or in the process of already done it. Then cooperative reforms have been there. In India, we had a very large cooperative reforms. In every country, some form of reform is going on. The issue is what is happening once the reform period is over. Again, complacency creeps into, and the reform, whatever process, institutional reform or regulatory reform, whatever done, again comes to the back to the square. So whether reform is a kind of continuing agenda, it should be a continuous exercise that has to be done. Then the institutional, wherever central bank and others, they always take care of the regulated entities for their depositor protection and their institutional protection. Whereas those who are not regulated, their institutional protection mechanism is not there. There is a need for having institutional protection. Even in the African countries, it was contended that it should have for this cooperative and others. Then so the issue is all the institutions should be demand based. Whatever RFI institutions should be sustainable and it should be based on the country's requirement. And the secondly, the financial inclusion plan everywhere it is being done, including the financial literacy campaign being all led by central banks now. The issue is they are only taking the regulated entity for the financial inclusion plan. Can it be all the financial institutions, including the Credit Information Bureau, they are only limited to the regulated entity? Whether all these institutions who are operating in the rural field can be taken into the financial inclusion plan. Then for the banking industry, farmers and producer association and this self-regulatory organization can play a change agent for reform, not for just having a demand or some kind of grievances, they can play a change in it. And the court arrangement, a virtuous cycle of the replication upscaling process have to be undertaken. And then lastly, there should be a kind of proactive, responsive and forward-looking policy formulation and implementation. So this is do not sell. I just gave you an overview and I have flagged the issues, and these are the issues have been, the recommendations are based on the actual studies conducted for 8 countries in the Eastern and Southern Africa and some of the experience in India and other countries. And I hope the policy is given adequate and sharper focus, then only the innovations and replication of the best practices can be effectively implemented, leading to better agricultural production and better and more access to the rural finance. Thank you.
Thank you very much, Dr. Hunter. This is a very rich paper in both depth and breadth. And I think he has covered a very vast field. And one of the points that I think I have picked, which really is something that we have to all work on, is the issue of the sequence: policy, strategy, and then move into the regulatory institutions. Now this I think is very important, and some of the issues I'm hoping that the panelists would speak to some of the issues he has raised: land reforms that are needed, and a huge number of other issues. So thank you very much, Dr. Mahati. I know the time is too short, but this is the most that we can make given our circumstances. And I will have to now call on Dr. Ismail Ibu, the first presenter actually, but I understood from him he had to go down to start because he's also a trainer, and he started doing the training. So we are actually pinching him from the training sessions to come and make his own presentation. So Dr. Ibu, we have 15 minutes. Can you come over and make your presentation? And thereafter, we require all of you, along with the panelists, to take our seats in front of the audience to engage on the issues that you are going to address.
So while I was down there, somebody rushed in to call me that I should come and make a presentation. So please forgive me for all the errors. Now, my presentation, one of the apologies first and foremost is that there is no PowerPoint presentation because it has not been ready. I wanted to use the evening to make some corrections, and I don't think it is suitable enough for me to make that now. So that was why since they said I should present, I will present a case study. By background, I'm from a university. Within the university, we have a research institute, and ours is an extension research institute. Now, in Nigeria, over the years, we have been having problems of adoption of recommended technologies. So what was called an adopted village, which we copied from India, was introduced to us. When we are doing that, we realize that that is much more of a top-down approach. So, being an extension institute, we decided to adopt the adopted villages and use them with the value chain approach. So essentially, we have done that. And incidentally, where Saleh, the Secretary General, came from, he had a background from, came from Bank of Agri. It was Bank of Agriculture and Rural Development before. We had the instance during our experiment to carry the managing director and teach them how to do warehouse financing. We had to carry from the managing director, the managers, where we operate to be here so that we can show them how the warehousing is operated. So after that experiment, we realized that we are settled with the adopted village, of which all the such issues in Nigeria have adopted villages, ranging from 5 to 10. But the fact that we are an extension institute, we have more than 159, because we have 6 zonal offices. So So what we did was, we put them into groups, we built their capacities, and we continuously build their capacity. But to do that, we need to link them up to credit sources, import markets, and output markets. So what I'm presenting here is our experience on the linkage to the credit institutions. So far, it has not been easy, but we have succeeded in getting them, and in most cases, we have to put in the guarantee. Our institute has to pay in the guarantee, and after at least 1 or 2 years, usually the bankers don't even look for us. But we realize that there is a problem there. Because once you don't put the farmers into perspective as to what they are going to do with the money they have collected, there's usually a problem of default. But all the farmers that are under our tutelage, we have 100% recovery. And so for that reason, the banks usually go to our own groups. Now, basically we have been doing this one for the last 10 years. And of recent, in Zaria, around Zaria area, the university has a microfinance fund which is quite big. So we have linked our farmers through the microfinance fund, and they have been getting money. But what they have been basically using the money was just to acquire inputs. So they buy fertilizer, which we have to certify, and sometimes we even have to actually evaluate the fertilizer. We realize that there's a lot of let's say the fertilizers are not really, not all the fertilizers that are being sold are genuine. So being that we are within the university and we have laboratories, so whenever we collect, we link them to the fertilizer sources, we get samples, come and analyze, and make sure that what is claimed, what they claim under the active ingredient is what is there. 29, 15, 15 should be 15, 15. And we have also found that there are a lot of people that are selling adulterated fertilizer to the farmers. Now, what we do again is we ensure that it is the association that applies for the loan, not the individuals. So there is a procedure, and we train them very well. So there is a procedure, and the protocol is such that individuals will bring in their requirements, and then the association will now collect the assignment, and they will now write a request, an application on behalf of the association. So far now we have reached the secondary level. We have the primary association and we have secondary association. By 2017, we are going to go into the Apex association. So basically we are now operating at the secondary level. And at that level there is a limit to what they can do, especially with the issues of the economies of scale. So for that reason, we have now restricted our activities mainly to acquisition of inputs and then ensuring that they apply the inputs correctly as described by the agencies and all the technologies that have been given. Then the next issue is we wanted to experiment on the warehouse receipt system. But the problem we ran into was that the warehouses that are in the villages were not suitable. We have already taken some funds to inspect the houses, but they were not comfortable with that one. So we have a program in the sense that within the rural areas that we are operating, the warehouse, the condition of the warehouse were not suitable for that particular thing. So we are asking the local governments and the communities and ourselves to contribute money at least to build a warehouse. So for that one, that is where we are. But in terms of repayment rate, the repayment really is almost 100%. And one of the strategies that we use is, because they have collected, they apply collectively, we make sure that there is an extra, everybody has to contribute at least an extra 10%. And that is what we keep aside in their own account. So if there is a default, we use that one to pay, knowing fully well that it's everybody's money that is going to be used in the repayment. So we had low down on default. So perhaps with your permission, sir, maybe I'll stop here and other things will be clarified during the question and answer session. Thank you very much.
Thank you very much. You have helped us tremendously because we have saving time. Now, I would like to request the presenters and the panelists to take their seats so that we can then ask the panelists to speak to the topic, and we will now engage the audience thereafter. You might want to ask some questions. Can I ask Dr. Mahadi, can you kindly come and take a seat? Dr. Iru. Dr. Iru, can you also move over there? Can I call the Honorable Minister of State Agriculture, Honorable Tony Ms. Danira? Take a seat, please. Can I call on Nori Kigali from Zimbabwe? Can I call on Eric Ligamba from Rwanda here? Or is here? Eric Ligamba is taking a seat. And my friend Jared Etenga. Thank you very much. Now, I take it, I will join you now, and then we start. Now, we have agreed that panelists will take 5 minutes to speak to the theme, and then we will now come back to the floor to answer questions or to listen to comments from experts on the field. So I would like to start with the Honorable Minister, if you don't mind, so that we can, I know you have to leave at some stage, if I'm able to start the time, so this is what I'd like to follow to start these responses of all panelists. Thank you very much.
Thank you. Thank you very much. Let me start by appreciating the invitation to this important conference. But of course, as a country, we are honored to host it and to welcome this group of participants. This was done already in the morning during the opening, but I wanted to make sure I also join my voice to the ones of other government officials in the morning who welcomed you. And many thanks again for inviting me to be on this particular panel. After the 2 presentations we've had, I think it is very clear that me sitting here and representing government and probably other governments on the continent of Africa would feel the same way. And particularly following this morning's session, I wasn't present, but the Honorable Minister of Agriculture and Animal Resources, who was a guest of honor, was able to highlight the key facts around the assets that we have in Africa, starting from land and all that goes with it, particularly for agriculture, but also specifically highlighting the needs or the gaps in terms of providing the right financing to agriculture and rural development. So as I was listening to the presentations we just had from Dr. Mahadi and Dr. Iru, I think I felt I would perhaps just listen to what else would be needed from policymakers like myself to make sure that the various financial services providers are able to fully come on board. To just mention that in Rwanda in particular, much as again the Honorable Minister this morning has mentioned all the key points, we believe we have very strong foundations on which the private sector could come fully on board and will partner to provide the right financial products to our farmers. On the other hand, we are very receptive to any requests that come from the private sector and financial institutions in this particular case. And this is thanks to a very strong institutional framework in place. I know my colleague Eric, who works for the Ministry of Finance, is going to particularly mention how we dialogue. The dialogue between policymakers, development partners, private sector, farmers, grouped into cooperatives or other associations. We do dialogue very often, and we tend to know what is needed to be where we want to be. Rural finance in Rwanda is still at less than 10%. When the target for the next few years now, 5 years, if not less, is to more than double that. And so whenever we sit down as stakeholders, I see many familiar faces in this conference room. From the private sector, I see Judith from AFR and many others. We spend a lot of time discussing these matters to really try and understand what else could be done. So what I wanted to say is that, and if I'm allowed to even speak on behalf of other African countries, I think a good state, a good government would just want to be a facilitator, as it was well mentioned. We believe that, particularly in Rwanda, and I know that it's the case in many other African countries, we have quite heavily invested in this area of development. Believe the private sector, including financial institutions, should be taking the driving seat, and we facilitate business environment. This is something, as Rwanda in particular, we attach very high importance on. We also invest in reforming. Every year, we assess where we are in terms of reforming our business environment. So if there are any other reforms that are needed, again, through the institutional framework we have in place, which, if they don't exist in other African countries, I would encourage to have. It becomes easy to understand and to know where the gaps still are on the policy side, to be able to provide that environment that will encourage more and more financial products for rural development. And as I end, I would like to mention that I think financial institutions really need to invest in building their own capacities. I'm saying this for Rwanda in particular. I know this might be the case in other African countries, but it's not a secret that particularly commercial banks tend to spend more efforts on other sectors than this particular one. And so this is an appeal again, and I'm sure this is something that will be probably repeated more than once, that financial institutions can do more in really building capacities in order to understand the specifics around rural development and agriculture in particular. And government will still come on board to provide incentives and other elements that may be needed for these financial institutions to provide the finance that is needed. So that's my initial humble contribution to the discussion that is taking place here. Thank you.
Thank you very much, Honorable Minister. I would like to assure you at least for Nigeria, these are some of the issues. But I wouldn't want to make comments. My hope is that some people might let me go directly to Mali Dungani so that you can share with us the Zimbabwean experience, whatever insight you might have on what has been said.
Thank you very much. Good afternoon to you all. I am Modi Kigali. I work for CBZ Bank, which is part of CBZ Holdings. It's the largest financial institution or commercial bank in the world. Sorry about that. Yeah, I work for the largest commercial bank in Zimbabwe. As you know, in Zimbabwe, we had a land reform in 2000, and that saw a number of large farmers leaving the country and a lot of other farmers taking over. So agriculture has been an area that has been looked into in terms of priority to resuscitate agriculture. You will find that rural finance or rural agriculture was not a key issue in our country, but now it has become very important. And like our presenters highlighted, it is important for the central government, the central bank, and the central government, as well as financial institutions, to actually make sure that they work together in order to succeed in whatever the initiatives they will be taking for rural financing. In Zimbabwe, the Minister of Agriculture has made it his policy that he actually talks to all the stakeholders, like the Honorable Minister was just saying now, to make sure that whoever plays a part has got responsibility and has got support. So the government, in essence, is taking a facilitation role. In the meantime, the central bank, which is the Reserve Bank of Zimbabwe, has since this year launched a financial inclusion strategy, which has been launched with all the commercial banks, microfinance institutions, and all the development partners and the donor agencies that actually work in our country. As a result, we have seen that it has assisted in that people have got direction in terms of financial inclusion and also in terms of rural agriculture financing. We have seen a lot of banks now reaching out using agency banking model. Mobile operators are playing their part, also making sure that the people in the rural areas have got access. As a bank, what we have since done is that we are sort of a leading bank in terms of rural agriculture. Thanks to my experiences with Africa, I've had to share a lot of experiences in previous workshops, and this has actually assisted us to make sure that we progress. We have actually formed a unit which is specific to microfinance, SMEs, and rural agriculture. We are working in Zimbabwe with donor agencies. We have currently running an FAO project for livelihood and food security program. What we do there is we are using a model because of the demands for security. We are using a model that has been already been talked about here, which is group lending, where our development partners like Care International, they go into an area and they actually put people in groups, they train them. We come in just as a financial provider. We make sure that whatever inputs are required, we also supply. We don't give the farmers money cash. So we use the value chain model, where we actually give them the inputs, and we make sure that we have secured the off-taker. So theirs is to be trained and learn how to grow a product, period. And then there is a ready farmer to take off the product. And we have seen that whatever projects we have done, most of our provinces have been successful in that we find that the transaction is actually ring-fenced. We have seen a number of other financial institutions again coming on board and following suit. So it has become, like I said, an RBZ-led financial inclusion strategy, which we have seen working. I think just to end there, maybe I could just say that in Zimbabwe, previously, agricultural financing was mainly for microfinance institutions, which are not deposit taking. So those ones were the known ones, go and work with NGOs in the various areas. But now it has become an issue for all the financial institutions, and we are seeing it progressively.
you very much, Molly, for this intervention. Can I call on Eric Egamba from the Ministry of Finance and Economic Planning here to also make his own intervention? Thank you.
Good afternoon, ladies and gentlemen. Quite easy for me after the speakers and the presentations. Mine is just shape a bit, especially in line with the bit of experience from Rwanda. I think for me, I will look at it from both the supply and demand side. So as we talk about policies, we need to look at the situation whereby we put in place the right policies, as the presenter said, the right strategies, and then the legal framework that would allow the supply side players to be able to do what they're supposed to do. Now, quite often what we see is that the policies are put in place, and the strategies are very beautiful, because part of it, especially in Africa, we get support from our local partners, and we shape very good strategies. But I think the challenge still remains around how do you then get these strategies to transform the farmers we're talking about, to transform the rural areas into what I would call bankable businesses. And this would go as deep, from, like my sister was saying, even getting the farmers' ability to be able to understand and appreciate before you think about uptake and usage of these financial services, to be able to use them when they find them in their locations. And so what probably the government of Rwanda has tried to do, and what quite a number of other African countries have tried to do, is to put in place policies that will equip the farmers with the abilities to be able to understand the activities they are engaged in, but also to be able to ask or demand for the right services. And some of these initiatives quite across Africa, and what my sister is saying, financial inclusion, financial education, that help these people to try to understand the kind of loan you should be asking for when you go to a bank or a financial institution in microfinance or a circle. And this goes deep as to look at it, well, what I would call consumer protection guidelines and laws in place, so that they don't look for, they cease to look at financial institutions as people are being favored for them to be able to get them into access to this finance. What is happening from the kind of discussions Honorable Minister was talking about, when we have our regular meetings with the banks, the MFIs, the regulators, the policymakers, the government partners, and we sit in one room and try to think through a process of how can you find a solution. Quite often you find a debate that is very interesting, where everyone is pointing the finger. And like, no, the banks need to do more. No. The farmers are too risky. And so, what I think from a policy perspective, we start thinking about how do we put in place policies and strategies that makes these farmers attractive to the owners of the money, to the supply of the money. And then we turn around, also look at what this should be doing in terms of the policy to constitute an environment that is going to be an enabler for the supply side players, the banks, the MFI, the circles. A case for Rwanda, in every administrative sector, we have set up a cooperative, which is basically a self-regulated cooperative, which was to address the question of proximity. And we felt that is good enough. I can assure you, a lot has been addressed, but there's a lot to do still. When it comes to pricing, it comes to, again, what I normally call the groom and bride battle. How do you bring the farmers to be able to get closer and appreciate what the services these institutions are producing, are providing, but also how do you make these financial institutions to be able to understand, appreciate, and find business opportunity within these small farmers we're talking about. The first presenter talked about how many, the percentage of farmers that are in very small holds. And most of them believe for your money, you're going to give it to your brother if he was your brother, and engage in that substance agriculture. So the policies that I think that should be talking about today, and some of them the government of Rwanda tried to do, is to try to get this. I'm sure these have been talked about in the previous presentations this morning. How do you get these small farmers into organized groups, into cooperatives, into associations, whereby you build their capacities, whereby you try to do also make a business out of whatever small activity they're engaged in. So probably I will try to end it there, but I think my interest is to, I think we, throughout these 2 days, we keep on looking at how do we get the two parties move together through the whole value chain, financing and through and the agricultural finance, the agricultural value chain across the board. Probably we should be able to create an impact to the sons and daughters of Africa. Thank you.
Thank you very much, Eric. And I will now move to Jared so that we can hear your experiences in Kenya, please.
Thank you very much. I'd like to speak to a few observations regarding especially the role of policymakers in strengthening the framework for agricultural lending. I know there is usually a dilemma for central banks, particularly given the challenge of harmonizing the mandate of the central bank. Strictly speaking, is monetary policy as well as financial sector stability, the soundness and stability of the financial sector. And so balancing between that primary objective of the central bank versus the developmental agenda that would encourage certain emphases like lending to agriculture is a challenge that many central banks find very difficult to balance. And in Kenya, the central bank has occasionally gone out of its way to step out of its very narrow mandate to support certain financial inclusion agendas like the famous M-Pesa program. And some people have argued that while that has brought lots of success in the developmental agenda of the economy, it has, in the view of some, it has caused a risk because the central bank's attention has probably been overstretched by looking more towards development than to financial sector stability. That's a theory that in Kenya is being debated, and there are those who argue that the central bank should withdraw some of its energies from the developmental agenda to core business. And one of the ways I have seen the central bank in Kenya try to balance that mandate is to second some of its staff to projects that help to improve the credit market. I am one of those staff who has been seconded out for a long time, for probably 8 or so years now. And one of the mandates I was given is to help develop a credit reporting system for Kenya by working with private sector. And while there, I began to see how the data that is supposed to be shared between the banks and the credit reference bureaus that were licensed in the course of that project, I began to get interested to see how does the data reflect on the diversity of the lending, and in this particular case to agriculture. And so while we developed that credit referencing mechanism, we also developed an interest in data analytics. And so we are advising the central bank now, and they are looking at a model borrowed, or rather, that has worked well in Mexico, to see how credit bureau data can be analyzed by the regulators to identify trends, gaps, and challenges just by looking at credit bureau data to develop analytics that inform not only banking supervision, but also monetary policy and also developmental aspects, like in the case of agricultural lending. Another example of how policymakers can work closely with the private sector is what I have seen in the index for weather insurance, crop insurance. I'm aware that when one of the donor organizations started working purely on the private sector engagement to develop index-based weather insurance, they faced challenges because of the kind of data that they were missing out in modeling the kind of products that they wanted to work with the insurance companies. And when they reached kind of a dead end, they engaged closely with the Ministry of Livestock and Fisheries to work with them and with the regulator for insurance, the Insurance Regulatory Authority, to develop, to work on a study that would help model the kind of insurance-based products that could mitigate the risk for lenders, for credit providers who want to focus on agricultural lending. And I can see that FSB Kenya, working with the Insurance Regulatory Authority, is actually making progress now in coming up with products that could be useful to allow credit providers lend to agriculture without exposing them unduly to the risk of default. I'll probably just mention one more initiative that I see the central bank working on to see that the private sector is comfortable in their lending to agriculture. And this is in the area of capacity building. In the case of the Central Bank of Kenya, I have seen Central Bank working through institutions like the Kenya School of Monetary Studies and other agencies to develop capacity building programs that support lending institutions to fill in the gap that often arises when it comes to dealing with agricultural consumers of credit. And one such program is the Executive Certificate in Agricultural Finance that is now being run between the collaboration of the regulator and its institution of monetary studies, the United States Department of Agriculture, and the Global Communities Partners for Good, Financial Access East Africa, championed and encouraged by the regulator. So there are ways in which the regulator could focus its intentions on developing programs for lending to agriculture without compromising on its core mandate of monetary policy and financial sector stability. I'll leave it there and see whether we can pick up some of the questions. Thank you.
Thank you very much, Gerald. I think, beautiful ideas, very good experiences to share, but then the time is so short. I would like to request the permission of Africa and the audience because we're basically 5 minutes more to finish the session. But if we can take another 15 minutes, that will help us to now get the sense of basically controlling everything. And one of the things we have found necessary outside the workshops we do with the agricultural experts of the states is to get the federal government itself educated about the role differentiation. We have 3 levels of government in Nigeria. We have the federal, we have the state, and we have the local government. And agriculture is on the concurrent list, meaning constitutionally every level of government can engage in agriculture. But the federal ministry tends to want to do everything. And it's quite a running battle trying to ask them or get them to give up. It is in their agreeing to concentrate on creating that enabling environment and putting the policies that are necessary, and the procedure of the policies. I mean, from the experiences we have seen, it's not properly coordinated, it's not properly well thought through. And part of our task now is to convey some of these things to our ministries of agriculture, to appreciate that policies have to go through or come along with strategy, with legislation, and then basically the regulatory institutions to be able to use it. Also to make them appreciate that transformation of agriculture particularly means the private sector. And some of the issues of risks, which has been the major problem with lending institutions, I think we have seen how many ideas are there now. In Nigeria, of course, the central bank has created an institution which it has now taken out of the central bank precisely to mitigate the risk of lending institutions. They have quite a large sum of money, and the idea is once they come in and guarantee those kind of risks, then the interest rate comes to about 50%. And there are other ways also of making the interest rate even lower, so that the farmer will be able to access. But of course, it has to build the capacity of so many of the institutions in the chain that they are going to be working, and this is basically what is there. And one interesting experiment, I think, is we had in the morning, is it in the Philippines, or I don't know, it was in Brazil, where we find women becoming nearly 70% or so of those who benefit from it. And I like the question that was asked, and even more the answer that was given, that simply women are found to be more reliable in keeping their promises. So I think this is something also we should explore. Distinguished ladies and gentlemen, I'm not trying to make a summary, but I just wanted to share some of our experiences in Nigeria. And now we have about 15 minutes to hear from you, comments, questions, interventions. I know 15 minutes is too short a time for a large audience like this, but I would request that those who want to raise up their hands, and we'll try to make it as short and brief to the point as possible. So let me see what hands are there. We have 1, 2, 3, 4, 5, 6, 7. If we share the time, that would be 2 minutes. So if people will agree to speak 2 minutes, actually it should be 1 minute, so that the responses from the other side can be. So can we start with the gentleman over there? Can you let us have quickly your name and try to go to the point and make it, if you can, 1 minute, please.
Yes, good afternoon. My name is Kinyanjui, Kenya Women Microfinance Bank. I work in Kenya Women, an institution that is for women. First of all, to clarify, the bank is what we're talking about, the supply side. I want to say that banks are quite liquid. They are liquid, they have a lot of money to actually put in place agricultural sector. And my question goes to Dr. Yil from Nigeria, like the adopted villages model. One of the things that banks are fearing is what the chair is saying, the risk. And I would like you to share. You have said that we recover 100%. And if we do that, then that is where the bank will actually fund the money, and we do our disbursements there. So you can talk about that. The other thing you can talk about is in terms of input finance. How do you ensure that after we do the financing at the input level, during harvesting, the farmers will not sell outside the formal system? In Kenya, I know we call it side selling, and the financial is left at risk. If you do that, I'll thank you very much.
Thank you very much. There was a hand somewhere here. Yes, please. Yeah, the mic is there.
Yeah, thank you very much. My name is Henry Lokich from Kenya. I think probably because the screen there is blocking the banner for the conference. If we are not careful, we are going to miss the opportunity given by this conference, which is their policies that are good, they are working. Why is it that other countries are not replicating? In terms of products, in terms of innovations, why is it that we have innovations but they are not being replicated? Why are they not being diffused? I have a feeling that we are talking about innovation and good policy, but we are missing actually the real issue for this particular meeting is why are these good policies not being replicated?
Very kind of you.
Yeah.
Very good point.
So if I come from one new African country, I want to learn from one which are the best agricultural policy, rural finance policies. Which country should I go to visit? That's what I would like to hear.
Thank you very much.
Thank you very much.
Come back to the other side. I have a hand here, and then we have I think, two more, which will be just maybe 1 minute, please.
Thank you. I'm Abubakar from Ahmad Bello University, Zaria, Nigeria. I just want to consolidate last speaker's points. And in doing that, I would like to refer to what Mr. Joseph from SICA talked about. He listed 6 cardinal enablers that made Europe to really develop their agriculture and rural financing, which he said to them is not an issue anymore. So I picked the first one, which is training and education. Now, I think it's quite important when I listen to all that we have discussed, I see this missing in terms of policy, framework, and CITED. Where, I'm asking all of you, where do we see the nesting of educational sector, to reinforce the agricultural, in this particular case, agricultural financing in terms of, systemic capacity building, looking at the strata of the cadres, all of them, the grassroots agricultural officers, the supervisors, and what have you. Where is the connection in terms of our colleges of agriculture, our polytechnics, our universities? Because to me, he has hit the nail. The first thing he said was education and training, to be able to really leverage and use to get. So I would like some of you to please respond to this. Where do we see the nesting in Africa in terms of synergy between education and this issue we are discussing, referring to the replicability? Thank you.
Thank you very much. Very important point. We have a hand somewhere there. I'm not sure we can take all the hands, but there is one who exactly. And then we come to this position that we have to allow. I'm sure the panelists have noted that I want to put all the questions first, and then each one of you will be able to make a few comments. Yes, please.
Thank you very much. My name is Tunji Lala. I'm the Executive Director of Renaissance Maine. We're a service provider in Rwanda here, doing agricultural mechanization. I'm based in the UK, but I have a privilege to assist the project here in Rwanda. What I want to say, I want to acknowledge everything that all the panelists have said from the Minister of State and every other person. Yeah, I quite agree with all what you've said, and you've touched on most important things. Like what you said earlier, that there is a disconnect between what the policies are at the governmental levels and how can we transmit it down to the grassroots, the farmers down there. And we have to get that to them, because what the average farmer in the rural areas, what they understand is different from what the policymakers are saying and what the banks are saying. Banks in Africa are risk averse, I'm sorry to say, but to lift agriculture from where it is in Africa, we need to invest in it. And that means risk has to be taken. Research and development, which is very, very important, has to be continuous, plus education. And all the people who need to be on board need to be on the board professionals, policymakers, bankers, so that there's confidence to take this forward. So I would like to see that, how we work it together. Thank you very much.
Thank you very much. We have just enough time for the panelists to have 1 minute each. So I'm afraid we can't continue much as I would like us to continue. Maybe we have to use other opportunities subsequently during the conference to make such a points we continue. Can I take a reverse direction now? I want to start with Derek, if you have a minute to make any comment, and then we can go in this direction, please.
Yes, I think I can only comment about the need for training and education. And I think that the coordination that I'm seeing now between institutions like the School of Military Studies and the government to work out training opportunities, especially for the lending space, I think is a great opportunity that can be taken advantage of. I'm sure that the programs that are already being proposed and some which are already running will make a big contribution. It may not be what you would call comprehensive, because I hear the discussion being around institutions right from colleges to universities. I think at least what is available is a great first step to train credit providers on agriculture.
Thank you very much. Can I move to Eric? Take another minute.
Thank you so much. I probably will comment on, just to add on training and education for the students of Rwanda. What the government has done is to set up, apart from the usual universities with some dedicated departments, the government has decided to go vocational in a sense that we have set up what we call Rwanda Institute for cooperatives, entrepreneurs, and microfinance institutions. So the TBD farmers, the TBD cooperative owners or members and others to come close and ask all the basic questions. But at the same time, also these small microfinance and circles are able to get a bit of support to build their capacity. And that's a bit new. We have not really heard much in terms of what they can do. And we believe and have seen positive impact people starting going there to learn from this institute. The other thing is also we have Access Finance Rwanda has tried to set up specific agriculture financing departments within financial institutions, and they've been piloting this for 2 years. And what they want to see is an enhanced capacities of financial institutions to understand the real nature of business, of agriculture business. I mean, as I said, 3 years, I'm not sure how much we'll be able to yield, but we feel that we will still try to bring the gap. Thank you.
Yeah, I was about to say that
these gaps we still find in rural financing will keep going down and hopefully, completely eliminated. Thank you very much.
Thank you. I think in terms of issue of training, you're quite right. It is an area which needs continuous improvement. There is a gap. What we have experienced in our country is that the development partners that are actually working with us on projects take the technical partner role. They are training, yes, but we have seen also that there is a gap even with the service providers in terms of ourselves as financial institutions to actually be able to manage rural financing. And we have seen the FAO project is actually able to deal with the sector. As I said before, Reserve Bank of Zimbabwe through the financial inclusion strategy are also taking initiatives to make sure that people are actually educated and trained on how to roll out the strategy. And we feel that it's an area, yes, we will continue to discuss and make sure that we are able to cover as much area as possible.
Thank you. Well, let me try and answer the question that has been directly said to me, especially even from the right hand here. That is the issue of 100% repayment and site selling. So, first and foremost, it has to do with the issue of the building blocks. usually the mistake that has been made, we have cooperatives in Africa since the early 99, beginning of the century. But it was realized that cooperatives have the adopted schools. We also target the school children, especially at secondary school level. But I agree with the last speaker that it ends there. We don't have a linkage after that to the higher level, technical and secondary.
With the support of the Oxford Policy Management, they have from the ground level at the various, very intense discussion with all the stakeholders they are involved, a rural finance comprehensive policy and strategy, which have been accepted by the government of Zambia and which was also supported by IFAD. But the question is again implementation. They have accepted, they have adopted that policy, but making it implement. So with all said and done, that kind of focus on the rural finance has to come at the highest policy. There has to be, it is in the beginning, in the formative, in the nascent stage of the rural finance sector. So that's why probably this kind of documenting, disseminating, there are people are going to expose a visit to Ethiopia to see how the microfinance association will work. The people are coming from Ethiopia, going to Tanzania. This kind of exposure visits have been there. But the question of seriousness, who will implement it? It is only at the authority level. That requires a resolution, a kind of determined effort and a comprehensive approach for addressing the issues of people. That's my view of this.
Thank you very much, Dr. Mahati, and thank you all of the panelists and these presenters. I think what Dr. Mahati is saying basically to this very important question, it comes to political will to implement. And that's what we need to be working on.
That is a challenge. So my issue is, my request is that rural finance challenges and the comprehensively can be addressed if there is a seriousness at the stage of the government and policymakers that we need to make it.
Let me thank the Honorable Minister specifically for arranging to be late in his next appointment so that he can stay through this particular session. Thank you very much, Honorable Minister. Thank you very much, presenters and panelists. Thank you very much for the Can I ask the organizers to make any announcement they would like to make and let us know how long our break is going to be? Please, thank you.
Thank you very much, Dr. Usman, for guiding us. Would you please give the panel another round of applause for the fantastic session? I'm also going to request you, participants, to clap for yourselves. Please. That's been brilliant. So we are going for a coffee break. We're going to try, because we're still catching up on time, we shall make it a very quick 15 minutes. I think you can feel free to pick your cup of coffee and bring it